Hello students, this is the video lecture series on account of not-for-profit concern. In last two videos you have learned what is profit concern and what is not-for-profit concern. You have also learned the difference between profit and not-for-profit concern. In last video lecture you have seen what is receipt and payment account, the different types of receipt and payments, and income and expenditure account along with the balance sheet. In this lecture, we will see some adjustments for not-for-profit concern. Rent received. Here it is mentioned rent received for 11 month 11,000. And as you know, in a year there are 12 months. It means 1 month rent is outstanding. Let's see first the calculation. Rent for 11 month equal to 11,000. So for 1 month how much, that you have to calculate. So here you can see 11,000 multiplied by 1 upon 11 equal to 1,000. It means 1,000 rent is outstanding. Rupees 1,000 for rent is outstanding, and the effect is income and expenditure account credit side you have to add in rent, because here it is given rent received. Rent received, it shows this is the income, and therefore you have to record on credit side of the income and expenditure account, and what outstanding is there, therefore you have to add in rent. Second effect will be recorded in the balance sheet asset side. Here you can see on credit side of the income and expenditure account, in income, first we have recorded by rent 11,000. In that outstanding rent is added 1,000, and in outer column 12,000 amount is recorded. Second effect is recorded on the asset side, and here you have mentioned the word outstanding rent, amount is 1,000. Next adjustment is 10% loan taken from Bank of India, rupees 20,000. Here loan is taken from the bank and the amount of loan is rupees 20,000. The month is mentioned that on 1st January loan is taken, and the interest on loan is 10%. Let's see first the calculation. Here you can see, because loan is taken on 1st January, therefore from January to March it will be a 3 month, and therefore 3 month interest will be payable. The calculation of interest on loan equal to 20,000 multiplied by 10 upon 100, that is the rate of interest, multiplied by 3 upon 12, because 3 month interest will be payable, therefore 3 upon 12, and the amount you will get rupees 500. The first effect will be given in the income and expenditure account debit side, because this is the expense for the firm. Second effect will be given in the balance sheet liability side. In a loan you have to add this interest amount. Here you can see in income expenditure account debit side it is written to interest on loan 500 rupees, and in balance sheet liability side 10% loan taken 20,000 plus interest on loan payable is 500. So total amount 20,500 will be recorded in outer column. Next adjustment, leasehold land rupees 20,000 for 10 years from 1st April 2019. This leasehold land, it means the land is taken on lease for 10 years, and for 10 years at a time 20,000 amount is paid. Let's see the calculation first. Leasehold land 20,000, because it is taken for the 10 years, so it will be divided by 10. So after dividing by 10 you will get amount 2,000, which you have to consider as a depreciation. The first effect will be in income and expenditure account debit side, as we are giving depreciation effect in final account. debit side of the income and expenditure account. Second effect will be balance sheet asset side, less from leasehold land. Here you can see in the income and expenditure account debit side, we have to write as to depreciation on leasehold land 2000, and in balance sheet asset side, leasehold land 20,000 less depreciation 2,000, and outer column rupees 18,000 will be recorded. Our next adjustment, sale proceed of furniture rupees 7,500. It means the furniture was sold in rupees 7,500, and in bracket it is given the book value is rupees 8,000. It means in balance sheet the book value of the furniture is 8,000 but it is sold in 7,500. It means the company has loss. You can see in the calculation that furniture book value equal to 8,000 less selling price, that is 7,500, and concern has a loss on sale of furniture rupees 500. The first effect will be written in income and expenditure account debit side because this is the loss of rupees 500 which you have to record in income and expenditure account debit side. The second effect will be appear in balance sheet asset side. You have to deduct from the furniture. In income and expenditure account, you can see on the debit side that to loss on sale of furniture 500. Here you have to record loss, and in balance sheet you can see furniture is rupees 20,000 less sales is 8,000. Here you have to deduct the book value from that particular asset. Here furniture is sold and the value of furniture is 8,000. So the book value will be deducted from the asset, that is 8,000, and in outer column it will be recorded 12,000. Outstanding interest. The receipt and payment account. Here it is given the payment side by 10% fixed deposit. It means the amount is deposited as a fixed deposit rupees 1 lakh rupees, and in bracket it is mentioned that deposited on 1st January 2020. 1st January it is deposited, and 10% indicates the rate of interest. It means 10% interest will be calculated for 3 months from January to March on rupees 1 lakh. It means outstanding interest for 3 months. Let's see the calculation. Outstanding interest on fixed deposit equal to 1 lakh multiplied by 10 upon 100, that is the rate of interest, multiplied by 3 upon 12, that are the months, equal to 2,500 rupees. First effect you have to give in income and expenditure account credit side, because fixed deposit is an asset and on asset interest is getting, therefore this is the income, and in income side you have to record as by outstanding interest on fixed deposit 2,500. Second effect in balance sheet asset side, 10% fixed deposit 1 lakh plus outstanding interest 2,500. So outer column you will record 1 lakh 2,500. Next adjustment is outstanding expense, expenses payable, expenses due but not paid. First effect, income and expenditure account debit side, add to particular expense. Second effect will be in balance sheet liability side. For example, outstanding salary, salary is outstanding, and as you know salary is an expense. So first effect you can see in income and expenditure account debit side, that is expenditure side, two salaries, in that you have to add outstanding salary. Second effect in balance sheet liability side, you have to record as outstanding salary. Next adjustment is prepaid expense. expenses paid in advance, expenses paid but not due. The first effect, income and expenditure account debit side, because prepaid expense is there, therefore it will be deducted from that particular expense. And second effect will be in balance sheet asset side. The example, prepaid salaries. Salaries are prepaid. So let's see. In income and expenditure account debit side, you can see two salaries. From that salary, you have to deduct prepaid salaries, and after deducting, amount will be recorded in outer column. Second effect is in balance sheet asset side. You have to record as prepaid salaries. Our next adjustment is outstanding income, income receivable, income due but not received. The first effect will be in income and expenditure account credit side, add to particular income. Second effect will be in the balance sheet asset side. For example, locker rent receivable. Because this is the income, you have to record in income and expenditure account credit side. You can see here on credit side, that is the income side. By locker rent, add outstanding locker rent, and after adding that amount, the total amount will be recorded in outer column. Second effect is in balance sheet asset side. Here you have to write locker rent receivable. Otherwise, you can also write outstanding locker rent, and amount will be recorded. Income received in advance, pre-received income, income received but not due. The first effect will be in income and expenditure account credit side, less from particular income. Second effect is in balance sheet liability side. The example, rent received in advance. So here you can see in income and expenditure account credit side, we have recorded rent by rent. From that rent, we have to deduct pre-received rent, and after deducting the amount, you have to record amount in outer column. In balance sheet liability side, you can see here you have to record as a pre-received rent. Depreciation. Depreciation, as you know, this is the one kind of loss for the business. So first effect will be in the balance sheet asset side, less from that particular asset. And second effect, income and expenditure account debit side. For example, charge depreciation on furniture. So here in income and expenditure account debit side, you have to record as depreciation on furniture, and in balance sheet asset side, you have to deduct from the furniture as less depreciation, and after deducting the amount, you have to record in outer column. So in this part, you have learned some adjustments for the not-for-profit concern. In next part, we will see some more adjustments.